in to Disaster 365. I am your host, Joanna Wilson, Community Preparedness Officer from the Department of Disaster Management and Emergencies. Today we're going to continue our conversation with Dr. Balfour Spence on how we can utilize microinsurance as a strategy for disaster resilience and capacity development in the Turks and Caicos Islands. To give a brief recap, last week we discussed how microinsurance can be used by low-income households and small businesses as an affordable risk transfer strategy that will generate a sense of security to persons who could not afford traditional insurance tools. We also discussed how this strategy encourages individuals to put a greater effort and personal responsibility towards mitigation or actions to reduce their threats or expected losses and build national resilience. Dr. Spence, good morning.
Good morning.
Why would microinsurance be an appropriate or effective tool to be applied in the Turks and Caicos Islands or within the Caribbean region?
Well, because microinsurance targets people who cannot access traditional insurance. So it means then that it targets those who are poor. All right. And, the other thing is that when the poor is impacted, they cannot afford the cost of recovery. So who pays for the cost of recovery? Government, the state. Now, what microinsurance does, it allows that risk to be transferred away from the state to an insurance company. So the government benefits from microinsurance because they now don't have to underwrite the cost of recovery.
How would these households or group of persons be determined, and who should be prioritized for this type of insurance?
Well, let me say that for let's say the Turks and Caicos or any countries, the groups to be insured has to be informed by the conduct of a feasibility study. The reason being that each country will be different in terms of who should be prioritized. So there has to be the conduct of a feasibility to determine which groups are the most vulnerable, and based on the outcome of that feasibility study, we will you will intervene. But I will dare say that any group that is below the poverty line is usually a qualifying group for microinsurance, and that those group below the poverty line might translate into specific occupational endeavors. In some areas, I found fishermen, for instance, small-scale farmers, micro-enterprise operators, or just households that are below the poverty line. One of the things with microinsurance, though, is that, and especially in the context of a country like the Turks and Caicos Island, is that it requires a fairly large volume of insured, because there's always a possibility that, let's say, a hurricane could affect all the insured. So you'd be paying out to everybody at the same time. And the solvency of the insurer has to be protected as well. So the larger the pool, then the greater the potential for solvency of a microinsurance scheme.
Can you give us an example of a country that has implemented microinsurance as a strategy and some of their successes? Or more importantly, what are some of the steps that the Turks and Caicos will have to consider in order to implement a microinsurance strategy?
All right, let me share with you. I designed the microinsurance strategy for the British Virgin Islands. And what we did, we began with a feasibility study, as I mentioned. And based on that feasibility study, we were able to determine the most vulnerable groups, the groups that should be covered. We also have to determine the hazards that would be covered. My suggestion is always that we pilot a microinsurance intervention rather than trying to cover everything, doing everything, and realize there's a mistake. So we determine the hazards that are to be covered. And we also design a strategy for the governance of that microinsurance scheme. All right. It is the fact that it does not matter how low premiums get, there will always be some groups or some members of groups who simply cannot afford. So the strategy must ensure that all persons within that group have access. It means then that there's a role for the individual who is being insured, for government, for the private sector, and even for the donor agencies in ensuring that the premiums are affordable. How does that work? Well, the proposal we made in the case of the British Virgin Islands was that the government agreed that they would underwrite a percentage of the cost of the premium because they benefit. Because instead of having to bear the full burden of the recovery, now they pay a part of the premium and that's it. It's possible in that construct, and it would be different for the Turks and Caicos from the BVI. It is possible in that construct that the private sector could be engaged in offsetting some of that premium. Donor agencies might be. And in terms of how we organize the insured for microinsurance, we can't have individuals saying, yeah, I want coverage, because it's costly to deal with individuals. So the best kind of scenarios where there are associations or groups of people that you can channel premium through that group and payouts can come through that group, and you reduce the cost of administrating the scheme.
All right. Who are some of the key stakeholders to champion such a process?
Well, of course, an appropriate insurer has to be identified, and most insurers in the region has reinsurers elsewhere. So an appropriate insurer. But government, the National Disaster Office, through the National Disaster Office, I think that's what happened in the case of the British Virgin Islands. It was the National Disaster Office that championed the process. They are on the ground, but they also work closely with people who are in the social development sector. The finance ministry was an integral part of that initiative as well, and of course the people who are to be the insured, and the ones we identified, we interviewed them. We saw what kind their risks were. We included fishermen, small-scale farmers, micro-enterprise operators, and any household that was below the poverty level. Poverty level in the Turks and Caicos might be different from what it is in the BVI.
Do you have any closing remarks?
Well, let me say that I think that microinsurance allows, let me say, the poor to take charge of their own recovery. And it brings a certain level of pride. They're not sitting by waiting for a handout, but it allows them to determine their own destiny as far as recovery from disasters. And of course, it encourages mitigation strategies at that level.
Thank you, Dr. Spence, for your time and this information, and thank you to all our listeners for tuning in to Disaster 365.